We're in the
Eligibility.
webinar right now. Go to our YouTube channel. It's going to show up as an unlisted
Okay,
video.
so John says, if you talk about the new process for approving companies, increasing our selectivity, reduce higher risk.
Okay.
Here it
companies.
is. Just mention
Go
say
to
we are
literally our
picking
account
winners
in
for
the top
you.
right corner. Go to YouTube Studio.
1K subscribers. Great job, marketing team.
Go to videos.
Actually, it's good.
I don't know, my son has 4,500.
Okay.
Well, your
Well,
son
he's
is
doing
really
very
trying to make
controversial.
waves.
Well, we could do it too. Make controversy. Sells.
There you
It
go.
does.
Not for broker
There's the
dealer.
link.
I wanna stay away from controversy.
We tried with crypto.
Back to screen share.
How do I, this is the link I share?
Yep.
On the,
Okay.
And what about the microphone?
Max is doing the disclaimer to basically say that there's forward-looking statements presented ahead, so that all these things, this whole spiel.
Max, can you read that like
All right, just
a
go
radio
back.
ad?
everybody clap.
All right, are you ready, Max?
Following conversation. Sure.
Okay.
The following conversation may contain forward-looking statements and information relating to, among other things, the company, its business plan and strategy, and its industry. These forward-looking statements are based on the beliefs of, assumptions made by, and information currently available to the company's management. When used in the offering materials, the words estimate, project, believe, anticipate, intend, expect, and similar expressions are intended to identify forward-looking statements, which constitute respect to future events and are subject to risks and uncertainties that could cause the company's actual results to differ materially from those contained in the forward-looking statements. Investors are cautioned not to place undue reliance on these forward-looking statements, which speak only as of the date on which they are made. The company does not undertake any obligation to revise or update these forward-looking statements to reflect events or circumstances after such date or to reflect the occurrence of unanticipated events. And here's StartEngine's CEO, Howard Marks.
Well, welcome everybody to our 2018 earnings call. We're really excited to have you participate. As you probably know, StartEngine is a company that loves interacting with its investors. We have close to 4,000 investors in our company, and we're very proud to call you owners. So let's talk about the agenda, what we're going to go through today. I'm going to talk about our company, our mission, our values, our vision. I'm going to introduce to you our 2018 financials and talk a little bit about the company. And then we have some guests from our team. Joanna Cronin, who's our Chief Marketing Officer, is going to be talking about the marketing. We have also Alan Jepson, who's going to be talking about our sales plan, and so is Josh Amster. And then we'll have a section for your questions, and you'll be able to type your questions directly into this webinar, and we'll be happy to respond to them. So we're going to get started in a second. So one of the things that is important to our company is our vision. We believe that we need to set some very audacious goals because our company is about disrupting the financial services marketplace and allowing people to raise capital, entrepreneurs raise capital directly from the general public. In a way, we want to remove all the barriers to access to capital. This is a mission that's really, really important to us. And our mission has always been, to help entrepreneurs achieve their dreams. And this is the mission since the beginning when we started our business that we've decided to create that mission. So now our 10-year vision is really come together. We want in the next 10 years to help 10,000 companies raise $10 billion. It is a very audacious goal. And obviously, a lot of people could argue that it's impossible. However, let me point out that we've heard the same thing when we started business, that no one will ever invest in companies online because that's not done. No one will be able to raise money from people directly from the general public because the rules are not in place. And we've heard that constantly. And yet we've been able to achieve some great milestones. And we're just at the beginning of the crowdfunding revolution. We believe that's the future of finance. So I wanted to walk through what the values are at StartEngine. Values not just for the people who work here, but there's also values for how we treat our the entrepreneurs who are raising capital on StartEngine and the investors who are investing in those campaigns. The first thing that is so important is to own the mission. And the mission is to help entrepreneurs achieve their dreams. Everybody at our company is focused on that mission. The other value that we've put together is make no excuses, which really means that when we make a commitment, we have to follow through on it. And that is very important, especially for a financial firm. Be a team player. We believe our team works well together and we make sacrifices for each other to be able to achieve our goals. The next one is stay curious. We're learning today, every day, new ideas, new ways of helping our customers raise capital. We're also learning a lot about those regulations that we work with every day. And some of our team members are actually taking licenses and are learning every weekend new skill sets that will help our customers. The next one, the fifth one, is do the right thing. We're in a financial services company, and you can imagine what can happen in a financial services company when we are handling customers, the capital of the investors. Even though all the capital goes into an escrow account. Doing the right thing, making sure that everything that we do follows regulation is critical. The reputation of our company is at stake, and we take it very seriously. And we ask our team to do the right thing. In the financial services industry, you probably heard of a lot of the scandals. One of them was, recently a bank called Wells Fargo. And those scandals are a result because of a dysfunction inside of the team. And we believe in order for us to grow successfully, we need to educate our team, educate the entrepreneurs about what it means to do the right thing. And finally, the last value is care about others. And that is really important. Even as a team, we need to take care of the people who work here, but we also have to take care of our investors and the entrepreneurs. This is a community we're building that needs to stay strong. So what I'm going to do now is review the 2018 financials. This is just a quick summary. And you can see the entire financials in detail if you go on our website at startengine.com, and we have put together a footer on the bottom that gives you a link to the document we filed with the SEC. These financials were audited by a third-party CPA firm and have signed their audit letter. So in summary, our revenue has increased from $2 million in 2017 to $4.6 million, in 2018. It's an increase of 129%. So how did that increase happen? We increased premium revenue from 1.5 million in 2018. So we increased it because we had more customers who were looking to get help and services for their campaigns. So from 2017, when we introduced premium, we did about $200,000. It went up to $1.5 million. And that is significant. Our platform fees, which are the fees that we receive from the campaigns on StartEngine, went from $866,000 to $1.4 million. That is a significant increase as well because we launched more campaigns, and the number of campaigns resulted in a higher platform fee. We also had some events. Last year, we hosted 2 StartEngine summits. These summits' purpose was for us to establish leadership in the marketplace for cryptocurrency offerings. They were called at one point ICOs, initial coin offerings, and then later called STOs, security token offerings. We're still seeing some demand for security token offerings. However, we believe that the work we did last year is paving our way this year to help other companies raise capital in that space legally by following all the SEC regulations. So you can see that the event sponsorship went quite up from $100,000 to $600,000. Okay, I'm going to go through some of the costs. So cost of revenue increased to $2.6 million in 2018 from $700,000. And mainly the increase is because we added the credit card functionality where people can pay by credit cards, and we're passing on those fees to our customers, the issuers, not the investors. And the entrepreneurs are paying for those credit card fees, but that has put quite a lot of extra cost on our cost of revenues. And so you see, even though our sales nearly doubled, a little bit more than doubled, we had quite a large increase in the costs of revenue. And now, in terms of payroll, the same thing. We nearly over doubled our team, so we spent $732,000 from $272,000. And the increased headcount was basically we put a review team that reviews all of the financials and the documents from the companies who are going to come on our platform. And we also have a customer service team. So transaction costs. Transaction costs increased to almost $700,000 in 2018 from $203,000. Again, that's because we had more companies raising capital. And as we have more companies raising capital, the transaction costs are going up because of the increase of the number of companies and the credit cards, as I mentioned before. Gross margins decreased to 44%. And that is mainly because we are recognizing the increased revenue from the credit card fees, which is around 4%. And that 4% is a significant number to the 6% we were earning from the companies and fees. And so because we count the credit cards as part of our fees and we pass them on to the credit card vendor that we're using, that is basically decreasing our margin. We will see, this year, 2019, what we will achieve. But at this point, we're very focused on gross margin. Operating expense increased to $6,600,000 from $3.5 million. And that mainly is the sales and marketing. We spend quite a lot of money marketing our brand to attract new customers. We also spend a lot of money in research and development. That was one of the expenses we had. Okay, so at this point, I'm going to introduce you to Joanna Cronin, who is our head of marketing, chief marketing officer.
Thank you, Howard. As Howard mentioned, I am the Chief Marketing Officer at StartEngine, and I just wanted to make one quick note for anyone who is listening. If you have questions that you would like to ask, you can do so by clicking the Q&A button. There's a little Q icon in the bottom of the screen. You can click that and answer any of the questions. We have a whole section at the end that's going to be Q&A, so we will get to those questions. So as Howard mentioned, I'm going to be discussing the marketing strategy. This is really primarily what we're doing to target companies. So as we grow our brand and our business, a lot of that is dependent on the types of companies that we want to work with and help raise capital for. So our target market is really US-based businesses, primarily in the top metro areas, looking to raise between $500,000 and $50 million. So the top metro areas, this is something we look at. If you haven't read it, we publish a StartEngine index every month, and we've seen that there are certain metro areas that seem to have the highest number of companies that are actually looking to raise money through equity crowdfunding. And for $500,000 to $50 million, this is really a target area because these are companies that want to raise additional rounds. Our goal is not to just have companies that are doing a one-off, but rather companies that are going to come back again and again for all of their rounds of funding. We also want to work with entrepreneurs that are willing to put themselves out there by engaging their audience, raising capital from their community, and allowing those investors to trade. So it's a big part of our mission and our goal to work with companies who are excited about this. Equity crowdfunding and the Jobs Act is a really new innovation in fundraising, and we want companies that are excited about that, care about putting their investors, bringing them into their company and allowing those investors to trade. So for companies that are uninterested in that, or perhaps don't want to actually engage their community, that's not really a good fit for StartEngine. The three uniques that we really provide for companies: first, we provide an end-to-end solution. So this is anywhere from your first raise, maybe $150,000, to your second raise with a Reg A plus, all the way to secondary. So we want something that's from beginning to end. We can provide all the services needed for companies. The second is the entrepreneur is in control. So this is really a big part of equity crowdfunding in general, but StartEngine specifically prides themselves on letting the entrepreneurs, choose their own terms. We are allowing them to keep control. This is one of the major benefits over venture capital or angel investments. And last, we lead by example. We raise capital from the crowd too. So this is an owner's call. And as you guys know, we are specifically, we want to put our money where our mouth is. We don't want to be, telling everyone else that equity crowdfunding is the way to raise capital and not do that ourselves. So it's a really important thing for us. We've been raising capital from the crowd, from our community of investors, and that's something we're really excited about. And it's a really unique differentiator, really, when we talk to companies. And lastly, our proven process. So when we talk to companies every day, this is where we sort of run them through the life cycle of what we want companies to do on StartEngine. So first, learn. This is a big educational piece. Equity crowdfunding is relatively new, and so there's a lot of education that goes into it. Then sign and onboarding. So for companies that would like to move forward, that are a good fit for StartEngine, we begin the onboarding process. Then most companies begin with a regulation crowdfunding offering and move on to either do an additional regulation crowdfunding offering or to a Reg A plus. Once they're able to disperse those funds, they can use that to grow their business, to start marketing, to hire, and then lastly, secondary. So this is really a key element that I know we've begun talking about, and I think there are quite a few questions about, which is having the ability for investors to then get liquidity and trade those shares. So that's our target when we talk about what companies we want to work with. These are really the ones that we're focusing on. And now Alan Jebsen, who's the VP of Sales, is going to talk, Josh Amster is going to talk about our one-year strategy.
All right, thanks, Johanna. Hi, everybody. As Johanna mentioned, my name is Josh Amster. I am the VP of Sales at StartEngine, and today I'm going to talk to you guys about our one-year plan and what our goals are for the rest of this calendar year. So the first goal here is to launch our broker-dealer and do so by also launching 6 Regulation A+ offerings. So this is an extremely important goal for us. It's something that we've been working on for a long time to acquire our broker-dealer registration. Once we are able to do that, it's going to really open up our business and allow us to, launch a secondary platform. Also with our Regulation A+ and Regulation D offerings, really do a lot more for these companies by syndicating these offerings out to other broker-dealers and really trying to grow the investor base that we have. So there's just a lot of things that we can accomplish as a broker-dealer. And so we've been working towards this goal for some time now, and we've been hearing and seeing some really optimistic signs that lead us to believe that we will be able to accomplish this in 2019. The second goal for us at this point is to raise money for our company. So as you all know, we have a Regulation A+ offering that's currently live on the platform. and we are actively raising capital. So as Johanna just mentioned, we not only want to tell companies to raise capital this way, but we wanted to do it ourselves. We truly believe this is the best way to finance our company. And so we plan to always be raising money for StartEngine and doing it through Regulation A+. So we've put targets in place of what we want to accomplish month to month, year to year, but the goal is to always have a raise on StartEngine open for the general public to be able to invest in our business. The third goal here is to sign 170 companies in 2019. So that generally breaks down to about 14 companies a month. And we've also done a little bit of an adjustment to our organization to focus on companies that we believe are good fits for the platform and good fits for the investors. So we're an application-based platform now, and we're really kind of digging into the details on every business that's considering a raise on our platform. And the goal here is to sign 170 qualified companies that we feel really do have a tremendous chance to raise money on the platform, and also are good opportunities for the investors as well. So trying to lower the risk in kind of the investors' decision-making process. Another goal of ours is to reduce onboarding to 4 weeks. So onboarding right now is it's not easy for these companies raising capital. There's a lot that goes into it, from building a campaign page to putting together the offering document with the legal disclosures and the financials as well. It's a complicated process, and trying to really simplify that as much as we possibly can is one thing that we're always thinking about. So what type of technology can we build or improve in our platform that makes things more seamless for the entrepreneur? What responsibilities and tasks can we take off of the entrepreneur's hands and do ourselves to reduce this time and get the companies live and up raising capital as quickly as possible? So something that we're constantly looking at, evolving, tweaking, is just to reduce the amount of time that companies experience once they're signed and before they go live in that onboarding period. The fifth goal here is to launch secondary. So launching secondary is our trading platform. I know there's been a lot of discussion and talk about this. It's something that we're really, really excited about, and we feel is the kind of the last step, if you will, in the full life cycle of StartEngine's ecosystem. So right now, we obviously help companies raise capital through that primary issuance of securities. And then the next step is to allow these investors to trade these securities. And that will be through our secondary trading platform. So in order to launch secondary, we need to accomplish goal number one, which is to become a broker dealer. And so that's number one. But once we get that, we do have plans to launch the secondary trading platform shortly thereafter. So we really feel that's going to be a game changer in this space. And then the last goal for the 2019 year is to launch our third pod. Our pod being kind of a sales team. It's kind of our internal word here that we're using is the pod. So to give you a little background on what a pod looks like. So there's a pod manager. There's a business development representative who's qualifying deals. There's the account executive who's signing those companies up to the platform. There's an account manager that's taking those signed companies and helping them through the onboarding period to get them launched on the platform. And then we also provide a campaign strategist as well. And that individual is working with the companies on their marketing strategies and what they need to do to be successful in raising money from the general public. So currently we have 2 sales teams or 2 pods at the moment. And by the end of this year, we want to launch a third pod as well. So that covers our goals in the 1-year plan. And next up, we're going to introduce Alan Jepson, another of our VPs of sales, who's going to go into our 3-year plan.
All right. Thank you, Josh. So my name is Alan Jepson, and Josh Amster and I I'm sorry, Josh Amster and I run the sales and services team here at StartEngine. So you heard Josh talk about the 1-year plan, and Howard, our 10-year vision. That's something that's really important to us. But you might be asking, how are we going to get there? So we needed to put a stake in the ground. And if we want to achieve 10,000 companies, raising $10 billion for those 10,000 companies in 10 years, well, we need to set a 3-year picture, identify what are our goals and how do we get there. So first thing is, in order to get there, we want to, in 3 years, have 200,000 active investors. That's something that is really important to us. We want to grow as a company. Obviously, we can't get to those measurables if we don't grow as an organization. So you heard Josh mention the pod system, the sales and services teams that we've created. We want to have 3 by the end of the year, and we have a schedule for 11 in 3 years by the end of 2021. We want to also grow as an organization and have 100 employees. We think that will really allow ourselves to serve our entrepreneurs and hit the aggressive numbers that we want for the team. Another team organization goal is to have a 10+ team devoted to StartEngine Secondary. So StartEngine Secondary now will be our fully broker-dealer and ATS licensed secondary market. We want to have a full team, 10+ people dedicated to that. We really feel like that's going to be a huge driver for our organization. Along with that, we want really strong revenue with secondary. We don't think that launching secondary is something that is a secondary goal to StartEngine. That's something that we really find, that we really hope to find real revenue and real growth from, and something that will drive our primary issuance business as well. We also want to ensure the investor experience is the best on the market. That covers the full life cycle of starting up, signing up with an account on StartEngine, investing in your first offering on StartEngine, and then completing that life cycle, liquidating your investment at a time that you'd like through our StartEngine secondary market. So launching secondary is a huge goal of ours, not only from a revenue standpoint, but from an investor standpoint as well. Next is StartEngine as part of the everyday investor's financial portfolio. So we want to grow StartEngine's financial services to include all different types of investment opportunities and offerings. So you can invest in early stage companies, you can invest in other types of financial products, and really make StartEngine part of everyday or of every investor's financial portfolio. That's a big vision that we see for StartEngine, the platform. One goal that we're really excited about is we want to launch one unicorn. So one of these early stage companies, we want to help grow and have them hopefully achieve a valuation of over $1 billion in 3 years. That's something that is really important to us, and we feel like we can help our companies achieve that. Part of our new fee structure is we are taking a percentage of the securities that a company is offering on the platform, and we want to own a portfolio of 500 companies where their combined value of the securities that we hold exceeds $100 million. That's a really aggressive goal, something that we think we can achieve if we do launch one unicorn, and we have a lot of strong opportunities in our portfolio from all of the qualified companies that Josh was mentioning now that we're looking to attract on the StartEngine platform. Next is the StartEngine brand. We want the brand to be recognized as #1 by the marketplace. When everyone thinks of equity crowdfunding, financial services, where do I invest my money, whether I'm looking for an early stage investment, later stage in the private venture area, we want StartEngine to be the #1 brand in the marketplace. That's something that's a 3-year goal of ours that we think we can really achieve. And lastly, with 100 employees, we envision ourselves covering the span of the United States. We're located here in Los Angeles, but we feel it's important for the team to expand to New York or the East Coast and have 2 really strong hubs of StartEngine team members furthering our mission and covering a lot more ground. So that's definitely in our plan for expansion, along with the 100 employees in 3 years. So that gives you guys an idea of if we're going to get to 10,000 companies and raise $10 billion for them in 10 years, we need to provide ourselves a 1-year plan and a 3-year picture of what it's going to look like at StartEngine in 3 years in order to achieve those goals. So I know everyone has been asking questions in the Q icon. Please continue to do so. Now we're going to turn it over to Howard, our CEO, who's going to answer all of your questions. And feel free to, while he's answering the questions, keep submitting them as we have some time allotted for Q&A. Thanks.
All right. Let me thank the StartEngine team for helping everybody here learn about our company in more details. And now I'm going to start answering questions that were asked by yourselves. So Robert is asking us a question: when will we be able to buy and sell investments on the StartEngine platform? Great question. So the StartEngine platform, which is secondary, first we need to get our broker-dealer license, which is basically registration. And that's been our goal. We've been working on it for about over a year. It's a lot of work. It requires a lot of work with the regulators, which makes sense. And so we feel that we're close, but we don't know when it's going to happen. So that's the first thing we have to get done. Second, we have to launch this technology platform for secondary, which we expect to launch this year. However, there's still, depends on getting the broker dealer, of course. Now, once secondary is launched, at that point, it is possible for us to put the StartEngine shares on secondary and allow investors to offer the shares to other investors. That is going to be possible, but we don't know when. So I can't give a date for that, but it's part of our plans. And as you can hear, giving you a certain date for certainty is just not possible because there's some of the elements are out of our control. What is in our control is to launch the technology marketplace, which we've been working on for a while. That's in our control. And putting the shares on the marketplace, that's in our control. But there's a lot of regulatory items that need to be handled first. Okay, the next question is David asked us that we had the secondary marketplace last year on our platform. It turns out it's different. We've made an agreement with a company called CFX, a broker dealer, to handle trades from our customers. But this is not a true alternative trading marketplace. It was more of a posting system where someone could post their shares, and if someone wanted to buy them, we would make the match. We were not earning any money from it, which is fine. We would send the transaction to the broker dealer who would handle it. It can take several weeks. Keep in mind that our goal with secondary is to have instant trades. It's a lot different. So this is not the same as secondary, although it was on our website. Patrick's asking us, what is the cost for acquiring a customer and what is the current burn rate? I can't speak to our current burn rate right now, which is we just started 2019. We're 1 quarter in. But what I can talk about is how close. We believe, based on indications from the regulators, that we're not that far. But again, we felt that way 3 months ago as well. So you have to understand that even though we're actively working with the regulators and being very, very diligent about it, it is out of our control. But we believe we're reasonably close. Okay. Robert asks another question. In the late 90s, I was one of the first day traders to trade from home via my home computer, and the big money shut that down with lobbyists that had trading laws change. Do you feel confident that this will not happen to crowdfunding? So basically, what he's saying is that it's possible that the rules and regulation changes and could be a negative impact to our company. Now, this is one of the risks that we've always explained to our investors when we had our offerings. However, we feel that the SEC is compelled to continue with crowdfunding. First of all, the reputation of crowdfunding has been pretty good. There hasn't been any large scandals or large frauds that have been uncovered. That's first, which is actually good news. But that doesn't mean it won't happen. Secondly, what is really good is that the SEC has a mandate as part of the SEC to help small companies get capital. And getting capital is critical for our economy, for the country, for entrepreneurs, and for preserving the American dream. So in our view, they're going to continue. The legislation for the Jobs Act was bipartisan, was overwhelmingly voted into the House. So our view is that's going to continue. Next question we got from Ryan. Do you see blockchain as a near-term solution to bring liquidity for startup investors on StartEngine? That's a great question. So blockchain is a technology that was developed initially for Bitcoin. And that technology is really getting into its maturity phase. However, the regulators, the SEC and FINRA, are looking into blockchain and cryptocurrencies very seriously. However, we believe that it's still very early at this point. So we're not going to do anything with the blockchain at this moment. That is not part of our plan for 2019. However, that may change as regulators make announcements, which we expect them to make announcements throughout the year, as how they view blockchain and how they think blockchain can help manage securities and allow investors to trade those securities on the blockchain. Secondary is not a blockchain solution and will not be using that kind of technology. Next question from Mark. It sounds like most goals are around equity raises, only a passing reference to STOs. Can you focus on both and do secondary trading on both? Now, it turns out that STOs, which are securities, because securities token offerings. So the idea here is you're raising money by offering to investors a security that is on the blockchain. Now, today, the SEC is looking into this very seriously. STOs can raise money by offering securities. Now, will those securities end up being on the blockchain exclusively? That's a great question. We have not seen a Regulation A+ offering be qualified by the SEC with a cryptocurrency as the delivery method for the securities. That has not happened. That has happened for regulation crowdfunding. So the question really is, will that happen for Regulation A+ this year? There is one offering out there that has a lot of visibility that may happen. So we're looking at it very carefully. So the next question is from Mark. What are the details to acquire securities in the 500 companies? Will this be part of the fee for every company or only selected companies? So we started recently. We changed our fee structure for regulation crowdfunding. We used to charge 6% as fees, no equity. This year, because we grew nicely and that we've been able to deliver quite a lot of quality services for our customers, we increased our fee to 7% from 6%. And on top of that, we added 2% of our fees in equity. So a company, for example, raises $1 million. They will pay us $70,000 in fees and $20,000 in the equivalent in equity. For Regulation A+ offerings, because we were not a broker-dealer, we were not able to charge a commission. What we're able to do is to charge a flat fee. As we become a broker-dealer, we will also charge for Regulation A+ a percentage of the offering once we're a broker-dealer, and also a percentage of the offering in equity. So that's going to be our plan for this year. But you have to understand it takes more than a few months to put this plan in place once we become a broker-dealer. Mark asks, are any of your competitors broker-dealers? The answer is yes. So Seed Invest is a competitor. They're out of New York. They recently were acquired by Circle. Circle is a cryptocurrency company that is well known for doing Bitcoin over-the-counter trades. They also have an app called Circle that helps investors invest in cryptocurrencies. They have also a secondary marketplace called Pullinex. They acquired Seed Invest. Our thinking was they wanted to have access to that broker-dealer so they can use it for Pullinex. But then again, that has not been announced and has not been clear. But they are a broker-dealer, Seed Invest. The other competitors so far are not broker-dealers, but we expect them to become broker-dealers sometime in the next future. So we could be the second participant in the marketplace as a broker-dealer and with an alternative trading secondary marketplace. John asks a question. Hi, I've been an investor for almost 2 years. In some companies, you never hear anything after the round ends. Is there anything you can do about this? This is a great question because we encourage the companies who raise capital on StartEngine to continue to communicate with the investors using the update feature that we've built. It's very easy for them to do it. They can go on update and type in the information, click a button, and all the investors will be instantly informed. However, we don't have any control on what a company is doing. We have no right to have control on them. We can encourage them to communicate with their customers, their investors, and which we do. So I think what we can do this year is continue to encourage the companies and the entrepreneurs to properly communicate with their investors. So Mike asks a question, back about in March 2018, I became a stockholder of StartEngine equity offering. This year, I noticed that you held an ICO and would like to understand the difference of what you're doing. Is a stockholder a part owner of the original company and the ICO a separate entity, or a different part of the same organization with different objectives? Okay, well, let me peel this. We wanted to do an ICO last year with our Regulation A+. That was our intent. So we did a test of waters as an ICO. The SEC did not qualify us at this time. We didn't know why. We suspected that it's possible because the complexity of the ICO, which is an initial coin offering, where you offer the securities as a cryptocurrency, was the problem. We took it out of that offering. And then post that change, we were finally qualified by the SEC. And now we have a live Regulation A+ offering. While we were doing our test of waters, we launched a private offering, which is a Reg D 506C, using what we say was a security token offering. And these investors, just a handful of investors, invested as accredited investors and received preferred shares in the company. And those shares eventually are going to be represented as a cryptocurrency on our ERC 1450 ledger LDGR technology, which is completed, but has not been really deployed, mainly because we're waiting for the regulators to give us the information we need to do it in a way that fits all of the regulations. So that's what happened. It is the same company. The shares that were issued in the Reg D are preferred in StartEngine Crowdfunding Inc. The shares we're issuing now in our Regulation A+ offering are also part of StartEngine Crowdfunding Inc. We have not sold any shares of another entity to any investor. It's always been in StartEngine Crowdfunding Inc. when we raise capital for our own company. Next question from Messiah Jacobs. Can you explain the dilution value for early investors? Many of us were first investors in the company. How does your plan of additional raising affect us? Now, that's all described in the new offering. I would like you to go to StartEngine, type StartEngine in the search bar, look at our offering, click on it, and then look at the offering circular. There's a link of it we put in this presentation. You'll see that was posted earlier on. Take a look. It gives you the details of how your investment has been diluted. Now, as we're selling shares at $7.50 compared to the original shares were $5, there's still a dilution. However, the dilution is different than if it was sold at $5 because the price of the share is higher. Okay, Jeff asks, how close are you to obtaining a broker-dealer license? I already covered that. Bart asks, what is the realistic estimate the shares will be worth 2, 5, and 10 years from now? Wow, that's such a great question because we have no idea what the share price is going to be worth. Now, we can decide the price of shares when we make our next offering after this one. To the extent that investors are interested in investing in at that new price, fantastic. To the extent they're not interested, that would be not allow us to raise more money. Now, once we put StartEngine on the secondary marketplace, the marketplace is going to decide what the price of the share. Now, will that price of the share be credible or not? It all depends on the liquidity, the number, the volume of the number of trades, the number of investors who are on the secondary marketplace is going to determine how credible the price of those shares are going to be once they're being traded. It's hard to predict this, so we won't make any prediction on that. Okay. Ryan is asking, what's the strategy to keep the costs in line with revenue or the plan to throw money out there hoping that revenue will fund raising? So our strategy this year is to reduce the burn because we would like to plan in the future to have profitability. That is part of our plan, profitability. In order to get there, the first step is to reduce costs compared to revenue. How do we do that? Is we have to become more efficient. We have to be more efficient with our marketing dollars. We have to be more efficient with our operating costs. And we're doing that this year. And we're very careful this year to make sure that our burn goes down significantly compared to last year. Sterling asks, do you have plans to increase 5% on the bonds? If so, when? So I'm not sure what that question is about. I think you should re-ask it because we are not offering bonds at this point. Once the secondary platform, so Charles asks, once the secondary platform is live, we'll be able to trade shares purchased on different platforms. Great question, because we would love to do that. That is not on our plan initially when we launch it. Our plan when we launch secondary is to trade the shares that we issued ourselves. And there's a good reason for that. The reason is because StartEngine owns StartEngine Secure, which is a transfer agent registered with the SEC. So we know when we issue the shares who owns what. Companies who did not use StartEngine to raise capital, it's not clear who owns what. And we would have to transfer that information into Secure and make sure it's correct. So that's why we're not doing it initially. But down the road, in the future, absolutely, we'd love to welcome companies who are interested in being on our secondary marketplace so we can grow our secondary marketplace. David asks a question. I noticed that new companies do not pop up until they receive a certain amount of funds. Can you take it back to where new companies will automatically pop back up as new companies regardless of funding amount? Now, it's interesting, this question. We debated this a lot on last year because what happened was a lot of companies were launched on StartEngine that didn't have any traction. And the main reason they didn't have traction is because the CEO of those companies and the management team behind those companies were not actively pitching their offering to their community. That's the users, customers, investors, their own community, people who care most about them. And we found that when a company reaches around $45,000, that means that they've put the right work in the community to reach that goal, helping them reach over 100,000 raise. Our goal is for companies to raise over $200,000. That's what we want, because that's the capital they need to build a business, to get started, and then raise more money later. However, unfortunately, these companies were not motivated. So one way to motivate them was to say, look, until you reach 45,000, we're not able to display you on the main page. You're not going to get the same marketing attention you would if you got to 45. So what happened was it gave a lot of motivation to these companies when they were launched to actually have a marketing plan in place and to move really fast and get things moving. And it's worked. The average raise on StartEngine has gone up. So in many ways, it's giving the right incentive, aligned the incentive of the entrepreneur with a StartEngine to make the campaigns more successful. One more company from Mark, and then we'll adjourn the meeting. Do you have a sense of how equity raises for private companies is impacted by bear market in public markets? This is interesting. We haven't seen a bear market in a long time. This is probably one of the longest stretch of a bull market in the history of the stock market since it's been formed. It's been an incredible run. So it's a great question to understand how a bear market will affect us. One thing we can be prepared for that is we will make sure that StartEngine has the capital it needs to weather the kind of storm that a bear market may bring to us. Secondly, it is very possible if there's a bear market on the NASDAQ, New York Stock Exchange, and the national markets, that the private marketplace gets some additional attention because people may get discouraged from the public marketplaces in terms of what the return expectations are and may find that a liquid secondary marketplace as such as ours may be attractive to them. So we may find some additional interest, but it's very hard to predict. Anyway, I really enjoyed this time with you. I'm really excited about the prospects of what we can do together. I would welcome you to introduce us to your friends, to come become investors in StartEngine and become investors also on the companies on our platform. There's a link here on our offering that you can share with your friends. The other thing I would like to invite you is to find your friends who are entrepreneurs, who are interested in raising capital for their businesses so they can grow, and introduce that to StartEngine. That would be such a great opportunity for all of us to grow the business. We will do more of those events. We hope to improve the quality of our events. So please send us feedback. We love looking at it. And thank you again for your time.